TheoTrade. This is Don Kaufman. January 11th, 2023. We've still got about 30 minutes to go to the cash close. The S&Ps, well, it's a rally. But can this rally withstand, of course, the main event, tomorrow's CPI coming out? Ooh, can you imagine if it comes out maybe a little hot what this marketplace can do? But if the CPI is actually a little softer, we're going to explode to the upside. People, this announcement coming out tomorrow, just with some of the trade activity leading up to it earlier this week, this is just going to be big, bad, binary. I mean, it's going to be some wild moves. So let's get right to business here and break down a little bit of the S&Ps, not only today's action, but the rally itself. So we're actually going to kick it off here on this evening's video, looking at a 30-day, this is a 30-day 1 hour. And one of the things that has just been kind of exemplary lately is this move and this consistent move from roughly 3,800 to 3,900. Ultimately, we have now really sparked a rally. And by the way, when I talk about a rally, we're not rallying off like this 3,800. The rally didn't really kick into high gear, obviously, until we broke through specifically the 13,931. And again, I want to label this because at present time, all you have to be able to go on right now in the S&Ps are levels, right? So you've got this 39.31. We ultimately came up to 39.31 earlier in the week. We failed off of it. Here we are right now, okay, with about 30 minutes to go to the cash close. We've actually broken above the 39.31, and one of the most critical aspects is just that. If you actually take a look at the 1 day, 1 minute, and even cruise back to some of the overnight trade, the break above the 39.31 ultimately has really only transpired, if you will, in ultimately into yesterday's close. But we really broke off the gravity point kind of overnight. Some surges in volume actually took us off the gravity point. That gravity point, again, is the 39.31 and ultimately resulted in markets heading higher. It's all for nothing right now. And I don't mind saying that. You know, when I say it's all for nothing, again, the rally and it withstanding the CPI, it's a big question mark. I mean, you know, 2 months ago, we had CPI come in a little soft. When I say a little soft, you know, if you say, hey, CPI is supposed to come in at 6.3% and it only comes in at 6.1%, inflation is cooling, the marketplace exploded, 200 handles. Okay, can you imagine if the contrary had happened? And that's why I call this big, bad, and binary. I mean, binary just means literally you're a coin flip away. But with that coin flip comes very, very specific levels, right? So one of the first things I want to bring up in the S&P futures, okay, there's nothing but upside. I mean, the next major level that we have on the screen in the S&P futures doesn't even come, okay, until 42.11. Now, you look at that and you think to yourself, that's insane. You know, normally I would agree, but so we're trading 39.80 right now. You think 42.11 is out of reach, but the last CPI report, you need only look back, okay, just briefly, because, yeah, there it is. And this is a move, roughly speaking, from 37.54. That's a straight shot up to 39.67. So when you think something is out of reach, that is a major level that is obtainable. Now, am I wildly bullish? Absolutely, unequivocally not. Listen, I still maintain bearish positions, even in light of what, you know, I see right ahead of me. What I see right ahead of me is nothing more than some boring trade that's resulting to an upside bounce. The upside bounce is predominantly being generated specifically by wildly oversold stocks, which is fine. I mean, you have to anticipate that. But look at stuff like Microsoft. This thing could not catch a bid to save its life, meaning there were no buyers in sight, literally from like, you know, mid-December until basically late last week. There was not a buyer in sight. So Microsoft is on a decent bounce, 2.3%. Carry it a little bit. Take a look at Google. I mean, Google is scraping the bottom of the proverbial barrel of where it's been. I mean, down here at the 85 handle, anything below that, it's actually going to achieve new lows. Same thing with Tesla. Okay, nobody wanted to touch this with a 10-foot pole. All of a sudden, they're buying it. So we're on a little bit of this, if you will, kind of relief rally Nothing more. Now, what is going to play a bigger role later this week, of course, is going to be the financials. But you can't even worry about the financials right now. Financials are going to have earnings. Financials, to me, are one of the primary drivers right now of the S&P, but push them aside. And the reason you got to push the financials aside, you got to get through CPI before you even worry about the financials. So right now, if you look at all the price action inside of the S&Ps, lo and behold, where are we? I'm actually going to make a quick point over here. I'm going to cruise to the SPX, the mother of all products. And we're going to take a quick glance right here, right now at this week's expected move. So this week, we're just shy of a $100 expected move. I believe off the top of my head, it was about a $98 expected move, right? So you're looking for a $98 move higher, $98 move lower. Where are we right now? Again, we started the week just shy of 3,900. Let's call it, we're 60 handles higher. Okay, so we have this $98 expected move. We're plus 60 right now, yada, yada, yada. You want to see something really interesting? All this is for nothing. The upside edge of that expected move comes into play right around 39.95. However, I say it's all for nothing. I'm going to show you something very interesting that you won't see too often. When I talk about big, bad, and binary, this is what I really mean. Look, okay, I'm even going to freeze the screen for a second. Look at the SPX in all of its glory here, the January 12th, which obviously is tomorrow's expiration. Take a look not only at the implied volatility, but the expected move versus the implied volatility and expected move of the next day. So obviously I've kind of highlighted here Thursday's expiration, right? Okay, so this one is over here in the red is Thursday, and this is obviously Friday. But on the Thursday expiration, you have almost an $80 expected move. So this is where you have to say as a trader, okay? And again, I have no problem saying this. When I ask the question, will the rally withstand CPI? Yeah, flip a coin in the air right now, because when the SPX looks like it has earnings, that's one of the craziest things I've seen. Like, listen, I was talking about this on TheoTrade live today, but I grew up in and around index products. I grew up around index traders. I had family that traded, in the index products, everything from OEX to XEO to SPX and 1.5 arbitrage. It's where I grew up. And I don't think I've seen, more than a handful of times this much, of like a divergence, if you will, in implied volatility. It literally looks like the SPX is going through earnings. When you have 1 day options trading at 46 vol, 2 day options trading at 36 vol, it looks like literally if you were like JP Morgan, which JP Morgan does have earnings, of course, later this week. If you were JP Morgan and you looked at the, the earnings announcement, oh, look, it's 63 vol against 36 vol. Yeah, but there's actually a week separating those two. And that's what is so pivotal right now inside of the marketplace. So, of course, traders are going to try to handicap this. They're going to be talking about it till they're blue in the face. All the talking heads get all excited about it. But in the end, what we're going to see is a little violence inside of trade. Even if that CPI number, comes out as expected, you have to anticipate some pretty heavy volatility playing out. And this is one time, and I don't do this very often, but this is one time where I'll tell you right now, that's 39.95 right there. It's 39.95. I don't think it makes a bit of difference. I think if we're going to explode to the upside, we're just going to go for it. We're just going to explode right through the upper edge of the expected move. What could hold some weight? What could hold some weight is if we reverted back down. Back down, we may stop for a brief and fleeting moment. It is an absolutely pivotal level at that 39.31. But look, I'd like to come on here on these nightly videos and give you, some definitive access, if you will, to a good, strong directional bias on my behalf. But, in years of experience, I'm going to tell you right now, I only have to look at implied volatility. You had me at implied volatility to recognize that this is a binary move and a violent binary move. And if you don't believe what I'm saying in that context, then just look right here on your screen. Forget about the SPX. Look right here on your screen. See that? That's the S&P is up by 1%. See this right here? Yeah, that's the VIX. When was the last time you saw VIX up? What? By 3%. with ultimately markets up. Like if that's not firing a warning shot, and by the way, we have seen the VIX up in a number of sessions recently with markets up. But if that's not firing enough of a warning shot, the market itself doesn't even trust the stability, okay, of the rally. So, with that question, will we withstand the rally? I don't think the rally makes a bit of difference. Okay, I don't often say that. We did break to the upside. We broke through the 39.31. I think the rally makes a bit of a difference. Okay, we're gonna get vicious in the next couple of days, and volatility. All right, as of late, this is also something crazy to talk about. There's some really wild things. If you look at volatility, that is VIX, and VIX is north of 20, and yet the S&Ps kind of feel like they can't get out of their own way. Does that look? We're channeling in a 100-point range. Does that look like a 20 VIX to you? If you have any experience in this business, you're probably going to say to yourself, hell no. Sorry to be so frank, okay? But no, this doesn't look like a 20 VIX to you, okay? What looks like a 20 VIX is when you're coming off hard and fast. So I succumb to the idea that you're going to see big moves, really big moves, because what has been pent up volatility is about to get released here. And again, it's not just, by the way, this is not just about Thursday, not just about CPI. It's going to be Friday as well. Obviously, the banks have earnings. That's going to be the next spark. But hey, lo and behold, strap in. This is about to get real in the next few hours of trade. So as I said, I'd love to give you directional bias, but a trader would know just looking at that implied volatility. Yeah, the only bias is flip a coin and get ready for some heavy volatility. Wrap your risk. You better be able to handle whatever directional bias that you have on right now, because people, as I said, it's going to get real. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.